Good morning, traders. This is Chris Buss with Traders Profit Compass with your daily edition of Before the Bell. This is the daily video where I do my best to provide you a ton of actionable content to set your day up for success. I want to welcome any new visitors to the site, to the videos. I encourage you to hit the subscribe button, the alarm bell, and the post notifications. That will let you know when I publish new content. And if you want to, jump over in the show notes and you'll find a link to the blog site where you can drop in your email, and then you'll get all my content sent directly to your inbox and you won't have to hunt for it. Also, in that registration process, here's some extra information for you. It is double opt-in, so you will get a confirmation email, and that messes up a lot of people, especially if it goes to your spam or junk folder. Look in there if you don't get an email right away. So it is 6:25 as I'm starting the video. And as always, run your video player at 1.5x. I think you'll really like that speed. I want to thank Tammy and Corey for the donations. I really appreciate that. That goes a long way to validate what I'm doing, that you're finding value in it. And I want to encourage the rest of you. You'll find a place to make a modest donation at the header of every blog post. And I assume you guys are all smart people and you've done your homework. There are a lot of guys out there that are offering a lot less for a lot more money. So I really appreciate it if you continue to support the channel and continue to validate the work. I really appreciate it. So looking ahead at futures, kind of a muted morning. Bitcoin's up about 0.75%. Oil continues its run, 1.2% higher. Copper's 1.5% higher. The rest of equities are marginally green, but we'll call it a flat morning. Over on the macro front, not a lot today except for a 20-year bond auction at 1 o'clock. You'll notice that there are no oil inventories today because of the Martin Luther King holiday on Monday. That has been pushed off to tomorrow, so tomorrow we'll get nat gas and oil inventories. Over on the earnings front, we've got ASML in the semiconductor group. We've got Bank of America, Morgan Stanley, and Procter & Gamble headlining before the bell. And then after the bell, we've got Alcoa, United Airlines, and Discover, along with some other financials after the bell. So those will be interesting to watch, specifically Morgan Stanley, that's in that group with Goldman, which had a disappointing report yesterday, and it really was a drag on the Dow. So we'll have to watch Morgan Stanley this morning. Taking a quick look at the dollar. You can see here that we got a bounce off this support level. Now we're back into resistance, so it'll be interesting if that gets rejected there and comes back down or continues to drive a little bit higher. What I found interesting yesterday, and actually the day before as well, that although the dollar was rising, it did not put a damper on commodities. And usually you see when the dollar's higher, it throttles commodities, but we really haven't seen that. So that shows the underlying strength in commodities. If commodities can go up in a rising dollar environment, then it shows that strength. Really, the story yesterday was the moonshot in rates, where we have moved from 1.7% all the way up to 1.865%. I've got an overhead resistance level at 1.93. Now, I would assume that rates will throttle itself or have a period of consolidation, and then we'll see if rates push above that 1.93%. And with that 20-year bond auction at 1 o'clock, I think that that may go a long ways to, kind of set the near-term expectation for rates. And of course, if rates are going up, then TLT is going down. You can see that we had this fast move down into support at 141 at these prior lows. We got a little bear flag rally that failed, and now we're down below 141. The door is open to a move down to 1.39. That would be my first target. Second target, 136.5. And then T3 down at 134 at the bottom of this $5 consolidation range. Now, my expectation would be for TLT, when it reaches this 139, to put in a little bit of a bounce. So if you're not short and you want to trade it, I would be looking to fade any kind of a bounce back in, move down back into 141, and then that would be a good short entry with a stop just above, and then look for 139. And then that second move, if we get it, to break through 139. First touch hold, bounce, second touch break. VIX is up towards 23. I mean, given all the selling, I think that's, no real panic, I wouldn't say. We've got a resistance level up at 25, and then we've got another resistance level up at 29. So if we get some kind of a panic move certainly into 29, but I don't think, given the selling that we've had already, if we got to move up into this range up here, I don't think that would be sustainable, and I would be looking to probably cover any shorts that you had at that level, and then expect VIX to come off and then, repeat the cycle. I do want to bring you up to speed on our oscillators. This is the New York. You can see we've taken a nosedive down to 34. It's getting down to the level where we got to be cognizant of an oversold condition. You can see that when we were down at 90, we got a great bounce, and even we got a reversal in the minus 50 range the last time around. So we're at 34 now, minus 34. So any kind of a big move in the next couple days will drive this down towards minus 50, minus 60, and we probably want to be not caught on the short side and kind of rotate out of that. Now I want to show you the NASDAQ. Same situation, but a little bit lower, minus 44. I think this move is coming to an end. We've got January OPEX on Friday, and usually an OPEX week is bullish. Of course, we haven't seen that so far, but we are getting down pretty low, so we got to be cognizant of this minus 60 level, and certainly anything beyond that, the down move would be on borrowed time, I would think, at that point. Moving on to SPY. We've broken decisively down below the 50, and now we're testing this area here at 457.50. I think that's your pivot for today. Any kind of move above that could come back up here to 462.5, where you've got a significant level of resistance, and any move down, we're targeting this 450 level, which was this prior low that we tagged here and that we tagged here. I think when it's all said and done, well, not all said and done, I think that price is going to find that 450 and revalidate these lows, whether we get a bounce first or some kind of a panic move down here. I think we do ultimately hit that 450, and then that will be a massive massive level of support, because if it breaks at 450, then you're coming down to the 200 down at 435, $15 lower. Here was the action yesterday. We had this big gap down that you should have marked on your chart. We talked about yesterday, were they going to gap it down and then rally to try and fill that? Didn't happen. It was a gap and go where it gapped down and just proceeded lower. Now, I didn't think that this sliver of a gap was going to make all that much of a difference. Obviously, I was wrong. We got two exact touches at the bottom of this gap down here about, I think it was like 455.40, something like that. You can get an exact number on that if you look at a 5-minute chart. But so now this gap has been filled. I think you can use the top of the gap around 456 as your pivot today. If we break that, especially if we break the low, I think we can come down here to validate this low at 453.5 and then see what happens at that level. And if 453.5 were to fail, really at any point today, tomorrow, whenever, then you're going to come down to that 450 level that we just talked about a moment ago. So I think those are the key levels for you today. Looking at the Qs, we've been bearish on these really ever since this big impulsive move. We did get a kickback rally up into the 50 that failed. Classic bear market action when you rally into an EMA cluster with one of those being the 50. That's a very important level. That was rejected. We came down and then rallied on Friday to bring it back up to 380 at the bottom of this $20 trading range. And so now we're well below 380. I would call 380 your key resistance level now. That until the bulls can recapture it, it's going to be tough to get a sustained move higher. Now you can see here that we're getting really close to this 200 down at 364 where we have a gap. I would anticipate that if we got another flush or down move, come into the 200 and the top of the gap, that would be a place to anticipate a bounce. I would not be holding shorts into the 200. I think you're going to get a bounce there, and it might be a significant one. Why? Because, well, first touch of the 200 in a long, long time, and if we got that move, remember the oscillators will go down even further, and then you'd have the recipe for a kickback rally. First move into the 200, move to a top of the gap with the oscillators oversold. I would, if you're an active trader, I would be positioning for a bounce there. So let's look at the 2-hour. Pretty interesting. We got the rally, then we got the gap down yesterday, and we came down to put in this double bottom right here about 370. And I want you to take notice of the bullish divergence. So we've made two equal lows, but on the second low, we've got the potential for bullish divergence here and bullish divergence in the RSI. So if we were to get a bounce and clear 372 and have this PPO start to turn up and RSI start to turn up, then we got the potential of a rally that would take us up into 375, 376 at the bottom of the gap and potentially fill that gap up to 380. So if you're actively trading it and you get a move this morning above 372, I would be a buyer there with a stop just below and see if you don't get a push up towards the bottom of the gap. And then if you get a gap entry, then of course you're looking for a gap fill up to 380. But if price moves back up into 380, that would be a place to take it off and try to fade that. Why? Because if you remember, 380 is the bottom of our big box, with all of this area up here being resistance. Moving on to IWM, really devastating day technically. Why? Because you can see on the chart that we've had this $23 consolidation range that literally goes back a year, actually more than a year, back to January of 21. And that 210 has held all along that line. And yesterday we broke it and closed pretty significantly below. We're down at 208. So now the door is open to a move down to 190. Now that, where does that come from? Just rounding off a $20 range added on to 210 brings you down to 190. There's going to be stops along the way. You know, I've got a level here at 202. We've got a gap down below, but this thing remains very, very, very vulnerable below 210. And if you were, wanting to trade this, then you should be keying off of 210 as a massive, massive pivot. And, if you get a kickback rally into 210 that fails, I would be hitting it there short. And if you, this is the kind of setup where you want to take duration and not particularly get all wrapped up in, a 5-minute chart. This is a setup where you want to go out in time and just, play the trend. We are below everything. We're below all the EMAs. We've got a bearish stack on the EMAs going on. We've broken below 1 year support. And if this thing keeps going, it's going to look like a big, big, big market top in small caps. Now, the fly in the ointment is this open gap. So one scenario to keep in mind, that if you're short against 210 and you get a break above, you got to cover. Honor your stop. Let this thing, if there's going to be a bear flag come up and fill this gap, that's certainly within the realm of possibility. All gaps tend to get filled. We just don't know when. That would be a place to try to fade it and then have it come back down again and break through and head on down. So we'll have to see how that goes. Just looking at the indicators, got a bear cross below 0 on the PPO, and that's on a daily. So it's significant. And you've also got RSI in the bearish regime, not even oversold yet. So these are favoring lower prices. So, IWM is on mission critical. And here it is on the 2-hour chart to get a little resolution. Had the gap down and it just went down the whole day. So now we're below 210. That's a critical level, and I think that is a major pivot for you. Moving on to the FATMAAN names. Facebook, major breakdown. Why? Well, we lost this $20 trading range. We lost the 200. So now, just on a measured move basis, we got a $20 trading range that we've broken below 20 from 325 brings you down to 305, which is not only this prior low, but the top of a support range. So that would be my target. And if I got any kind of a kickback rally into 325, that would be a place that would be very objective to put on a short. I want to just show you the 60-minute chart for more active traders. We do have this big gap here above that has yet to fill, and we had the gap down and it held in place in this flat bear flag for quite a number of hours and kind of broke at the end of the day. So I have support down here at, let's call it 316. That would be a place where you could potentially get a bounce here this morning if there's some further selling. And then if you started to sense a bounce starting to happen, that would be a place to try a long and see if you don't get a kickback rally up into 324 at the bottom of the gap. And then if there's a overall market bounce, or if rates fall and tech gets a bid, you get a break into this gap, you got a big one to fill from 324 all the way up towards 332. So that's about $8 of upside potentially on this gap fill. So that's one not to ignore. Apple dropped below this 172.5. We've got the 50 right here at 167.5. So that's going to be a major support level. And if we go down to the 60-minute chart, you can see that we dropped down and spent a lot of time right at the place where we thought it would hold at the top of this support band that I have here. Any kind of break at 170, that opens up tests of these prior lows at 168, 168.5. We've got the 50 at 168, and we've got the top of the gap at 168.50. So that is going to be a big, big level. Bulls certainly don't want to see the the market leader Apple lose its 50. That would be very bearish, and that would open up the door to fill this gap, then fill this gap, and then move down into the low 160s. So alarming the 50, even if you're not going to trade it, would be a smart thing to do, because if they're going after the generals and taking Apple down, there's going to be a lot of pain in the tech sector. Tesla actually held up pretty well. I was surprised. I have moved down this pivot point to, I had it at 1040. I moved it down to 1030, where you can see an awful lot of support has built up there. So I think 1030 is your clear pivot. Any kind of break below will send this down. You could, one thing you could do, actually I can do that for you just to show you how you would do it. Here's the first move in the bear flag. And there's your measured move. So you go, this is the first leg. Here's more or less a flat bear flag. And then if you get a break of 1030, your measured move would be down to 970. So that's how I would kind of project that. But, I mean, I guess it performed in line at minus 1.8%. I would have thought that, I mean, you can just tell that there's a lot of support in that area right there. So I would have 1030 alarmed in your platform if you're interested in selling that. And hey, if you see strength, you can be long against 1030 with a stop just below. It just kind of depends on what we get out of the market today. Microsoft remains very, very weak, and now we're below this key 305 breakout area. Of course, they had the headline news yesterday that they bought Activision Blizzard, so they were in the news, but you can see there was a big rally back up to close the gap at 310. If you were on your toes, that would have been a great place to try a short after that gap filled. And I think we talked about that scenario yesterday. And then they literally faded it the whole day. So now you can be short against 305 and you're looking for a move to the 200. If you get a little kickback, if there's market strength and it breaks above 305, take it off. And then if it moves back below, you put it on. I mean, that's trading. But just looking at the chart, very weak. And I am assuming, or my base case is lower unless something, dramatic happens. And certainly we know that 305 is the major pivot for Microsoft. Amazon, very bearish setup. Why? You've got the bearish EMA stack fully developed. We've got the 50, the 20, and the 8 all moving down. Price is well below the 200. The fast-moving averages are breaking below the 200. So that's a very bearish posture for Amazon. We can look at it on the 60-minute chart. Get this to load. You can see that we've moved down. We had 3250 as a pivot. It gapped down, made a little double bottom here at 3145, 3150, right in that area. So I think this prior low right here is your lower pivot, and then you've got the gap entry here at let's call it 31.95, right in that area. If you get a break above, you can be long up to 32.50, and then see how price handles the gap fill. Either it will reverse or break through, but that would be a place where you should certainly roll up your stops at a minimum. And I want to also show you, this was the same kind of setup we saw on one of the other charts. You've got a double bottom here, and you've got the potential for bullish divergence on both the PPO and the RSI. That's usually a money setup for a bounce. But, if there's more selling pressure, it can burn through that. If these, continue to go down and RSI breaks this trend line, then the double bottom with bullish divergence would be burned through and invalidated. But if you start getting a gap fill here, what you'll see is PPO turn up and put in a bull cross, and you'll see RSI break above 50, and then that'll be validation that you've in fact put in a double bottom and to look for higher prices. Netflix battling this 515 area, which is our pivot. As long as it's below, you can look for a first move down towards 585 at these lows, but then ultimately the bottom of the box at 470. So use 515 as your pivot. As you can see, really, really weak. Semiconductors, bad day at the office, 4.5%. We are currently in this $22 trading range. Top of the box rejected, came down, bounced off the 50, then gapped lower, and then we lost that 302, and then we broke below the 50 at 298. And so now we are nosediving towards 290 at the bottom of the box. And if you were not involved in any of this, then your key level is going to be 290, whether it holds or breaks. But just keeping with our TA principles, once you break out of this box to the downside, then you've got a $22 measured move target, which conveniently would take you down to the 200, down around 270. Fill this gap, drop below 275, and come down. Just remember that these levels will be support. First touch of the gap, touch of the breakout here at 275, and then the 200. So those are 3 targets right there for you on a break of that low. I want to show you the 60-minute chart. Just how you could have handled it yesterday. We had the gap down. Say you didn't get this first bar, that's fine. But then when you broke the 50, that was your next available entry. And you got, what amounts to a $6 move. And in my book, a $6 move in a couple hours ain't all bad. So that was a great setup and trade. So now today we'll see if this 292 holds, and then we've got the prior low at 289, or what is it? 288 was the prior low. So this 292 is going to come into focus for active traders. I want to go over the ARC complex because I did send out a note midday yesterday that I was advising, number one, you got to move down your stops. We've been in this trade for a while, at least a few weeks. I think we started talking about it the 4th of January, and we got this breakdown here. But now we're coming into weekly support. Now, you know that I've been short ARC F, ARC G, ARC K, and ARC W. Because we broke below this weekly on ARC F, I'm still in it. I've moved my stops down for any kind of a kickback rally, any kind of strength. I'm just going to close it out for a big win. I think most of us got short at 39, so that's a nice little win on ARC F. Here's the weekly on ARC G. Some people got short at 70. Some people got short at 59. Either way, I had the measured move target down here at 45. We've broken below this level of support here at 54. So given where we're at, I'm still short, and I'm still looking for lower prices here on ARC G. Now, ARC K, a little bit different, coming right into weekly support, and I closed it out here. So I'm going to reinitiate either after a bounce, or if like 75 fails, jump on a quick trade and come down. You can see here there's a massive void in the chart right below this level. And so, below 75, I don't think anybody's going to be home down here. So, we're going oversold here on the weekly. If you're not familiar with shorting or don't have a lot of experience with it, you always got to be cognizant of these rip your face off, oversold, short covering rallies. And so I'm always kind of in the back of my mind, have I overstayed my welcome, right? You don't want to just sit there so pleased with yourself that you've got this massive paper gain that you're looking at on your platform, it's always a good idea when you get a fast move in your direction, do one of two things. Well, three things, I guess. One, you can just take it off and congratulate yourself on a massive win. Number two, continually move down your stops, and if you see any sign of strength, close it out. Or number three, roll your strikes down. Like for instance, if you had gotten in up near 100 and now you're down at 75 with a massive $25 win in 3 weeks, then you can stay in the trade, buy some more time, and move your strikes down to 75. That way, you've made a massive trip to the bank. You got that win booked, and now you're still in the trade, but at much lower levels, and you've basically de-risked the position. So that's the way I like to handle shorts. So what I've done is taken it off, but my eyes are still peeled on it and ready for it to go lower. But I'm also ready for a bounce, because remember, the oscillator for all of NASDAQ is getting down there. So, I just wanted to make a trip to the bank. And same thing with ARKW. We had gotten in at I think it was 115. So we got almost a $20 move in short order. But you can see the candles are getting smaller. The selling pressure is diminishing, and we're coming into weekly support. So what I've kind of got in my mind, if we make a break below 95, or if there's a bounce that looks like a bear flag, we can set a level above, and then I think on the next plunge, then we take the next leg down. But I'm still in the bear camp across the ARK complex. And on the blog today, I have a posting of all the holdings in ARK-K. I mean, total destruction. Ponzi's and bubbles. I mean, there's stuff down 80%. A good one, a good holding is down 40, 45%. Most of them are 50%, 60%, 80%. And the thing is, the average ARK, I'm talking about ARK-K, I don't know about the other ones, but the average ARK holder is now underwater. And, as that pain increases, I think there's going to be more people that jump the ship. So be ready for that. And then for the same reasons, I thought there would be a bounce here at this support level on XBI. I covered it. We got January 105 puts last week, or was it 2 weeks ago? I'm not sure when we entered that position, but I know it was January 105s. So we got expiration on Friday. I didn't want to push my luck, so I closed those out. I was looking for and hoping for a little bounce here to get back in with February puts. So I might have given up a little bit right here, but anyways, it was a massive win. So I was quite pleased with that trade. So let's wrap it up here. Hope you have a good day of trading. I hope you found benefit in getting those levels. Focus on your execution. On your shorts, don't overstay your welcome. Make sure you know where you're going to get out on your trades. And at a very bare minimum, move your stops down. I think a little kickback rally is in our future, but I ultimately think that little kickback rally fails, and then we will head lower and probably go down on SPY to that 450 level, and on the Qs to go down and tag the 200. So that's my baseline case. So hope you have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.